Hello and welcome to this special program. Every few years, the topic of whether trading hours should be extended comes up. I personally have seen this issue crop up for at least the last 10 years and perhaps many more. We are at one of those moments once again. We are calling this show Extended Trading Hours, Longer Trading Hours, Boon or Bane, and we will debate both sides of the equation with some guests. But let me just quickly tell you why we are talking about this issue at this point in time. What we are picking up, what CNBC-TV18 is picking up from sources is the fact that exchanges led by stock exchanges, that is led by the National Stock Exchange, is in conversation, preliminary discussions and conversations with market participants, brokers, large, small, with respect to extending trading hours. Discussions are on. For now, I think the focus seems to be for the equity derivative contracts. Extending trading hours for the equity derivative contracts, Nifty futures, is largely the focus. There is no deadline or timeline as to by when a decision needs to be taken. This is what we've been given to understand. And there is widespread acknowledgement that before any decision, yes or no, is taken, the back end, which is tech, settlement and many other issues need to be sorted out. So there is no, by this date, which is there by when this has to be rolled out. Exchanges are of the view that any changes will be implemented in a very gradual way. Example of T+1, etc. has been given. Exchanges are, of course, in terms of why this needs to be done. One of the reasons which we've heard on the record many times over the years is the fact that current hours are basically pushing volumes offshore. SGX Nifty, etc., which of course has been talked about quite a bit. The other point is that this kind of also brings local trading hours in line with global trading hours. It's a very interlinked market, much more as compared to even say 5, 10, 15 years back. So this makes sense. It gives investors a much quicker reaction time to react to global events, etc. So this is basically the proposal which we understand from sources is being discussed. As I said, this is the preliminary stage, and there is no indication that a decision is imminent or anything of that sort. This may take some time before a decision is indeed reached. Now, where does the regulator stand in all of this? SEBI in 2018 did indeed approve this. So there is an enabling provision which allows for it. There are different time limits allowed for extension for the cash segment and for the equity future segment as well, for the future and option segment as well. So it is well within the exchange's rights to do this. They don't have to go back to the regulator to seek fresh permission. Will they do it or not is another matter, because this is a wide-ranging, large change which affects everybody in the ecosystem. But the enabling provision allows exchanges to actually do it if they feel so, after feedback, after consultation, etc. Now let's get some market participants and people involved and who follow the subject very closely into the discussion to get both sides of the debate on. Rajesh Baheti of Cross Seas Capital Services is joining us. Uttam Bagri is with us of the BSE Brokers Forum, and Sandeep Parekh of FinSec Law Advisors looks very closely at capital market laws, and he's with us as well. Gentlemen, great to have all of you with us here. Thank you very much for your time. Uttam, I think let me just begin by asking you, because we've discussed this very issue on the program, on the channel over the years, and I think I know where you stand. But tell us, what do you make of the latest impetus towards discussing this, giving this a relook? Go on.
So obviously there's always a case for relook. There's always a case of looking at the issue afresh. And things have changed, right? From 2018 till 2023 and so on and so forth. So when I speak to my member community, they're split basically on two. There's one camp who believes, oh, amazing, it's a great idea. The other camp says, boss, where is the benefit? So if I want to look at the advantages, the first advantage is the gap up, gap down. You have a continuous, the longer the markets, the less gap up, gap down issues are faced by the traders. That's one point in favor of extended hours. Second is, of course, we are fighting with the entire world. So we want the trading hours, we want the entire world to be trading at the time of the world's convenience. That goes in favor of longer trading hours. But the points against, and from many brokers' point of view, hey, my trading system is running. The more you trade, the more I'm going to earn. So as a broking committee, mujhe kya problem? And let's go ahead. But the other hand, the other side of the argument is when people believe that if you're going to really extend the trading hours, will the trading interest actually peter off? Now we have two examples in the Indian market. Look at the commodity segment. All right, we have this trading till 12 o'clock or 1 o'clock in the night. How many active UCCs are there in the commodity segment? There would be little number as compared to the main market. So extended hours has not really got people excited there. We have the India Annex and the NSE FSC trading in the gift city almost 24 hours. Now, how many people are really participating in the longer trading hours there? So this is the question that we ask each other. In extended hours, I guess you see a lot of volume in the beginning, lot in the end, and a little bit of a lean period unless there's a news. Are we going to just extend the lean period? Will it help? As regards the back offices or the brokers, will run 2 shifts, will run 3 shifts, will figure it out. The MI systems will be pressurized, they will figure it out. But conceptually, is the cost benefit analysis clear? I'm totally confused. My community is totally confused. Yeah.
Okay, it's good that Uttam, you've presented both sides of the equation, and I mean, of course, Uttam is represents the smaller, medium-sized brokers, which make up a large part of the industry. Rajesh Baheti, let me come to you. I know broadly where you stand on the subject, but this is a subject we've discussed in the past as well with you. What are your fresh thoughts? How are you looking at this subject now?
So in 2018, since you brought up 2018, we conducted a survey and we got responses, close to 200 responses, including emails, and we've submitted that entire sheet to SEBI in 2018-19, that over 90% of the members were not in favor of extending market timings, except for maybe the index futures. Now, the arguments that you were earlier making was, one is the global parity argument, and the second was
Rajesh, if I can, Rajesh, if I can just interrupt. When you say the 90% were not in favor, 90% by number, or 90% of
90% by number?
By number.
Because when you take a survey, you're not assigning weights to each person's volume in the market.
Sure.
It's just a pure number of brokers that want yes versus want no.
Okay, go on. Yes.
Yeah. Now, you pitch two arguments that the MIIs or the regulators give in favor of extending timings. One is that the global markets trade for longer hours. And two, that we've seen a lot of offshoring of Indian trading to SGX. Now, on both these counts, I have a slightly different take. So let's look at the global markets. I think Hong Kong has about $5 trillion plus worth of market cap. The Hong Kong markets, I don't think trade for longer trading hours. They also have a lunch break in between. So each market kind of figures out the comfort zone that aligns its own requirements to what the traders have in the particular country. The second example being touted by MIs is the fact that the commodity markets trade till 11:55. Now, in the commodity markets, if you see only the non-agricultural or the global commodities trade, and that is because we don't set the prices, we're a price following market. So the US markets are the price setting markets. So if you look at the volumes in the commodity markets, during the daytime in the energy sector, there's practically zero volume. It's only when the US markets open, and the fact that we are aligned to those prices because they set the prices, our prices and our markets get liquidity. In the equity market, we are setting our own prices because I don't think you can trade a Reliance equity apart from maybe some ADR somewhere, anywhere. So we are a price setting market. We don't need to align ourselves to any other markets because we set our own prices. Secondly, if you look at our volumes beyond the top 50 or 100 stocks, it's as it is very, very low. Liquidity is not there. Now extending timings is going to disperse that liquidity even further, and the bid-ask spread for most investors is going to get worse rather than get better. The third argument is offshoring. Let me tell you, it's just not the timing that leads to offshoring of our markets. There are issues with KYC, there are issues with margining, the fact that tax concerns are not there when you trade on the SGX, KYC norms are easier, and the fact that it's a dollar-denominated contract where you don't have to hedge your exposure with the dollar INR helps the Singapore exchange to garner that volume. and NSE does get a share of that trading revenue by way of licensing. So I don't think, personally, I don't think, apart from maybe giving some benefit to local traders to take SOS hedges on their overall exposure to the market by way of hedging the indices, I don't think you're going to get the offshore volume onshore. Yes, there may be a 5% increase in volumes outside of the main trading hours. But do remember, our margin norms are so straitjacketed. It is not on par with global now. So when you talk about global markets, then maybe we should compare everything, right? Not just the timings.
But Rajesh,
globally,
but Rajesh,
far more.
no, you made some very good points and solid points. But I mean, you got to start somewhere, right? All the other alignment will, and you said each market finds its own rhythm, how they want to deal with it. All of that will happen, right? I mean, you got to start somewhere. That's the point which many make. I'll come back to you, Rajesh, on some of these points, but let me get Sandeep Parekh in as well. He's been listening in. Sandeep, where do you stand on the matter?
So I actually don't have a very strong view in either direction. One thing for sure is I think it'll provide more entertainment. So I guess trading prices throughout the day.
Not on days like today,
people
Sandeep.
watching CNBC should go up, right?
Not on days like today. I mean, you had a 15-point up and down day, 4 hours more of that. I mean, but go on. Sorry.
Yeah. No, so I think I think the arguments have been seeking with the other markets is kind of including especially the Singapore market. I think is one of the arguments. But as Rajesh said, I think we really don't we create our own price really. What happens in SGX pre-market hours is usually it's just an indication. It's usually not determinative of what happens at 9:15 in our market. So I'm not sure. I think they're quite disconnected really to what really actually happens. So I think the biggest argument against extending trading hours would be, I think both of them I've already mentioned, is what they call fragmentation of liquidity. So if you have 100 shares which are trading over 5 hours versus 100 shares trading over 10 hours, the liquidity would kind of reduce over a longer period of time, and therefore, in fact, many markets are moving towards the opposite in terms of the less liquid trades are done through what is known as a call option market, which means you batch just 2 or 3 times in a day. You batch. In fact, it's also an interesting point when we talk of stuff like Adani, which happened for the past 2 weeks. When things go up or down more than 10%, many markets have actually started call auctions so that the new price can be set. Similarly, wherever liquidity is thin, or the prices of a call auction market, which means trades only in three short windows during the day. So I think unless it's kind of unless we're looking at very liquid stocks, and of course the F&O in those maybe 100 stocks where liquidity can sustain for longer periods of time, I think I'm somewhat ambiguous on whether it's a good idea or not.
But to be actually, it's not even the 100 stocks, Sandeep. I mean, I think from what one is given to understand, it is to begin with index futures, right? So will all of the arguments which Rajesh, Uttam and Sandeep are making hold if only trading in index futures, screen trading in index futures is allowed? That's something I want to get your views on. But we also have to take a very quick break, so let's do that. And we are back with this discussion with all three on the other side. Stay with us. Welcome back. Longer trading hours, Boon or Bane, that is a topic that we are discussing. And Rajesh Baheti, Uttam Bagri, Sandeep Parekh are with us to tell us what they make of the entire situation. The proposal, I mean, there is no sign that a decision is imminent, as we've been highlighting again and again. Now, we've heard many against points and maybe a few for points, especially from Uttam. So let me narrow this down, right? What we are given to understand, let me come to Uttam again, that this is going to be phased out in a is going to be rolled out in a very phased manner, starting with maybe index futures, right? So if that were the case, Uttam, how would you look at it? Would it be as disruptive? Yeah.
So again, see, the capacity of Indian intermediaries in the market to adjust is magical. That's, I keep on saying it many times. So if tomorrow the regulator, the authorities like MIs and regulator in their wisdom say, no, we want market share, fine. They will say it was not worth it, but if you want it, it will get done. But now let's start with derivatives. Now it's all arguments of convenience, right? At some point in time, we have lots of samajhdar people telling us, hey, India has too much derivatives going on, very little focus on the cash market. How can we get the cash market back? Let's get the focus on derivatives away. Now I say, no, for extended, we'll start only with derivatives and then we'll see what to do with the cash. Hello, I don't know. Is there a method in the madness? So that's the first thing. Another issue that one must realize that a majority of the market is moving towards algo trading. And the algos don't mind working 24 hours a day. So you run the algo on your Nifty strategies, your Sensex strategies. You run your algo on whatever you want to do and let the market continue, whatever happens. So we also need to figure out who we are trying to serve here. So that's the second issue that comes to our mind. But on your specific question on, if you do it in stages, fine. You do it in stages, do it one time, market will adjust. As long as directionally you think that's a good idea. Maybe if they want to experiment, hey, let's once a week, let's have an evening session, see what happens. You want to do that? Instead of doing only, we could start even that way. But before doing anything, I really request, let's change something for the sake of changing. Maybe because we'll get some benefits. I'm a bit scared. I'm sure there's a big study and I'm sure the authorities will take a call based on lots of data and analysis, or maybe a consultation paper at some time. But stages or together, market will adjust. Market always adjusts. Basically, that's what I mean.
No, I mean, Uttam, I'm sure that you are also giving all this feedback to the exchanges, right? And they will take all of this into consideration. Rajesh, I mean, starting with index futures, right? I think that is something that you're okay with, but you strongly feel that I mean, if trading hours were to be increased, it should only be for that, not for cash stocks, not for any other segment.
Absolutely, because you understand that market carries two kinds of risk: systematic risk and unsystematic risk. If you're dealing with a portfolio level approach and you need hedging opportunities, then the index trading will take care of all the systematic risks. Now, if you want to take care of unsystematic risk by saying, let's have the stocks trade, I think that can be open to abuse also. Imagine a company announcing results at 10 p.m. or 9 p.m. and very thin liquidity, and you can take the stock up or down 10% without anybody realizing it. So there are issues with respect to individual stocks trading. I'm absolutely very certain that it won't help in any way. It will disperse the liquidity and fragment that volume that is trading today and be counterproductive because the bid-ask spread will go up. If at all you want to do this, it should begin and end with the indices, and there's no other product that should be trading beyond the market.
Rajesh, what is I mean, I don't know if you've looked at how do other markets do it? The US, for example, or other Asian markets? I mean, is it limited to index futures?
That's my understanding, that in the US, the index futures and options continue to trade. The S&P and the Dow are not so much, even the Dow and the Nasdaq, as much as S&P. But the stocks don't trade beyond the trading hours, nor the stock options. The other thing is, in the US, every stock has an option that is allowed to trade. In India, we have this very limited list. So, if you want to globalize the market, there are other ways to do it. Allow options in all the stocks to trade. There's no reason why options shouldn't be trading in all the stocks.
Sandeep, any sense on where the regulator would stand in all of this? Because, I mean, as I said earlier, the enabling provision is there, right? But wouldn't they want to sort of, say if this is something of this is rolled out? I mean, they would want to be consulted. They would have a view. Many are also pointing to the recent study they published, right, where they said that 89% of all traders actually lose money. This was a SEBI study done over a period of time, and even a larger percentage of active traders lost lost money. Where would the regulator stand on this, Sandeep? Your sense?
No, so my sense is, I think two things regulator would be interested in. One is, of course, the larger point of whether uh, it should be enabled, longer trading hours. And I think they've taken a call that let the exchanges decide after kind of figuring it out. So I think that they seem to be open to the issue. The second is what you mentioned really, and in terms of 89% or 90% of the people losing money, punting stocks all day, morning to night, morning to evening, and now night. But I think a lot of that concern will get, at least if it's going to be index futures, etc. That's not going to be, those are not very exciting products. So I guess it would mainly be used for hedging, and it would kind of connect investors to kind of more global markets and stuff like that. So I think at the current, index futures level, I guess it really won't hurt this 89% statistic which you mentioned. But yes, certainly as you move into individual stocks or futures and options in individual stocks, I think a kind of wider debate would be necessary.
Rajesh, just to clarify, I mean, you can do index, not theoretically, but practically speaking, right? You can allow a trade on index futures to be extended without including options. You think that there's a problem there?
I mean, if the idea is to try and take away some of the SGX volumes back onshore, the SGX, and as it's quoted as an example why we need to extend our trading hours. I don't think any options trade on the SGX any meaningfully after Indian markets trade. Most of the options trade in the SGX is a one-to-one deal trade, cross-deal trade. And the SGX is only liquid as far as futures is concerned. And even there, you see that post the Indian markets close, the liquidity dries up. It only kind of follows the US markets for a bit. And as Sandeep mentioned, that the Indian Open at 9:15 is not even so much aligned to the SGX that you see at 9 o'clock in the morning. So at best, I think it'll give a hedging opportunity as an SOS opportunity if there is a systematic risk announcement or some global movement happens on stocks. But beyond that, I see no reason why options need to trade along with futures.
Okay, got that. Rajesh, thank you very much for being with us on the program. Uttam, thank you very much. And Sandeep, thanks very much for participating in this discussion. I am 100% sure, as are all of you, that this is not the last that we are hearing on this topic. This is as I said, preliminary in terms of discussion stage. And it's a long way to go before a final decision is taken. And along the way, we'll continue to report on what comes of it in terms of a discussion paper or feedback that we are getting from industry sources. Well, it's a wrap on this special show. Thank you very much for staying with us. More coming up on the other side.